it again. Hello, everyone. Miriam Kelly here with the Florida Home Dream team at RealNet Florida Real Estate. And today we're going to talk about a few things that have to do with getting ready for home ownership, what the state of the market is, down payment assistance, and one of these, a great program that is being offered here in the state of Florida. So today I'd like to introduce you to Charles Baxter with Certified Mortgage Planners, and he is our special guest today. So Charles, go ahead and introduce yourself.
Good afternoon, everyone. Like she said, Charles was certified mortgage planners. Been in the business several years now, and I'm very happy to be here on this call to share some knowledge about the programs and share some knowledge about the state of the market.
Great. So let's go ahead and go into what the state of the market. Primarily, we're talking about Florida real estate, and around the Tampa, Orlando, Tampa Bay area. So, what would you share with us that you feel that's what's going on in the market, that kind of thing.
Yeah, I have lived in both cities for several years, over 7 years both. So it's really crazy to see some of the prices that are going around. It used to be a $200,000 house was a dime a dozen in both Orlando and Tampa Bay. Now, if you say that to somebody, they laugh at you. So what it looks like from our research, our statistics is from the deals that we have closing at our branch and throughout the state, what we're seeing with title companies we work with, etc. We're getting a lot of people moving here from obviously California. We have New York. Seattle is
Yes.
interesting. There's like an Amazon feel. People are moving here, working remote. But those are three of the main hubs that we're seeing majority of people come here from. Texas is also on the map. So they're splitting between Texas and Florida and hitting three cities essentially. Now, two of them we're talking about on this call, but the third one is obvious to people as well, and that's Miami. So we got Orlando, Tampa, and Miami is essentially
Exactly.
where everybody's going. We're seeing prices continue to rise. And right now, I mean, rates have continued to go up, but we're not seeing a dip other than, a percent or so in the purchase price value, right? So
Right.
you'll say, oh, we're down 0.03%. Well, for the average, home buyer, they're like, it's still expensive to me. So prices are holding steady. The biggest thing we're seeing, and we believe we'll be seeing this for another 3 to 5 years, is just a lack of inventory.
I was getting
Over
ready to get
80,
into that. Yeah, yeah. People
absolutely.
don't understand that, right? We before COVID, it's this is something that's it's been a national issue, right? There's two things: inventory and affordable housing has been an issue, even before, what we're dealing with as far, nationwide as far as the economy and the interest rates going up.
Yeah, so what essentially what we're seeing is I do believe the number is over 60% of home buyers right now have mortgage rates under 4%.
Hmm.
If they don't have mortgage rates under 8%, they own I'm sorry, under 4%, they own the house free and clear, bringing that total number to just about 80%. So 80% of people either have 4% or less mortgage, or they have no mortgage at all, right? So a lot of that inventory that usually comes up every 3 to 5 years that would usually come onto the market for, as an existing home, they're just not coming. So we got a lot less inventory to fight over. And then, a lot of the millennials now, it's our generation's time to come into the market. They're having to pay a higher price than what their parents paid.
Right.
So
Exactly.
it is difficult, especially coming into a market now where you're looking at, anything from 6.5 to 7% or higher interest rates.
Exactly. So, now that you shared with us your perspective and just based on statistics and data that we're seeing and what we're experiencing being on this side of the real estate market, what five things or 5 points of advice that you would give someone who is thinking about buying? They don't know how to get started, and we're hearing a lot of this. There's just a lot of negative narrative about the home buying market. So, being in the mortgage profession, what would you suggest for a person who's renting possibly, and they're probably spending 50%, right, of their income on rent? What five things or tips that could you give them to that they could do or start doing or work on to get into the path of home ownership?
Yeah, a lot of people don't necessarily like my narrative, but I come off as super honest and transparent. First thing, I don't have a problem with people renting. I do have a problem with people renting for a long term. Usually, the renting situation is just preparing you for home ownership. So while you're renting, a very good thing to do is, what does your budget look like? Right? That's the first thing you got to figure out. What's your budget? What does your savings look like? How much savings do you have? 3 to 6 months is kind of a very nice chunk of change to have, just in case you do move into that house and the air conditioning goes out or something needs to be repaired.
Mm-hmm.
So typically, I like people, number one, to answer your question, have a look at their budget. Number two, have something put in place in terms of savings. 3 to 6 months. 3 months is ideal of what you're going to spend, just so when you move in, you've got a little change before those paychecks start
Right.
hitting. Credit is important. You don't need an 800 credit score to get what you want. I had a client wait a whole year to get a credit score of 800, and the rates went up three points. So she could have got a 4% interest rate with a 700 credit score. She wanted to wait another year. She got an 800 credit score. A year later, the rates are now 7.25. So
Right.
she could have got that four. So you just got to figure out your timing, right? If
Right.
now's a good time for you, you'll know that. So that's the third thing. Take a look at your credit score, make your payments on time. Fourth thing, I would have a conversation with, an agent you trust, and interview. Don't just go with the first agent at church, right? Interview and see who's a true professional. And then last but not least, of course, you got to get pre-approved,
Right.
right? So in order, I mean, if you will, those are the steps. Sometimes it's cool before you go to a bank. I know most people don't want to go get pre-approved first. They want to check out the house. Go check out the house before you even consider making an offer. Go talk to your mortgage broker, your banker, and figure out kind of what your options look like. What does the market look like?
Exactly.
Right.
Yeah.
So
And
those are my thoughts.
yeah, so I'll add to that on the the real estate agent side of it. I think it's important, like you said, if they don't know where to start. We all know that about 98% and probably 100% of all buyers, when they're thinking about buying or they think they're ready to buy, they go online, right? And that's fine. That's great. We understand that, but it is important to work with someone that you can, trust, that's going to provide you with the information, because really what real estate agents do, we're providing them with our knowledge, right? So I always tell everyone, you know what, speak to an agent. That agent really should be giving them so information like you're giving them, and asking them some basic questions to sort of see where they are. And then I train my team agents as well, part of your buyer's presentation is to also say to them, are you already speaking with a lender? Do you have a banker that you have a relationship with, that you can go in? Because this, that way we can build a strategic plan for them, right? Because sometimes
Right.
people will think that they're ready and really they're not, and then we can sort of catch those things, so that it gives us some time to fix those things so that they can get qualified for their mortgages. So I think that's really important. So talking about, now we've talked about the state of the market and some things that people can do to get into the path of home ownership and get their pre-approval for their loan. One of the questions that I have for new buyers and sellers as well, I've run into this, because the market has shifted again. There are a lot of people that are in the market now that don't realize that what we had happen in 21 and 22 was sort of 2021 primarily was an anomaly. That wasn't what we would have called a normal market, and there were different factors, right, that was associated with that. So a lot of times I have to explain to people, I know 7%, and with the economy being the way it is, oh my gosh, it's so outrageous, but it's really not the highest that interest rate has been historically, right? But with that being said, it's having to provide them with that knowledge again, because before they were used to, okay, you put a house on the market, it's gone in like 24 hours, no appraisal, no inspection, no nothing. So now I'm having to explain to sellers that, hey, most likely the buyers are going to be asking, because this has been recommended to them by their lender, their mortgage professional, for concessions or either credits. Could you kind of explain what is a concession, what is a credit, in the financing aspect of it?
Yeah, so there's several different strategies to get into home ownership. If you haven't heard of it now, one of the strategies, you can use different buy downs. However, a buy down essentially has to be paid for by the seller. Now, different programs have different concessions. Concessions are essentially, it's funny to try and explain it, but let's say we have, let me just use a nice number here. Let's say we have a $300,000 house and you would like a 3% concession on that. It's $9,000. $9,000 could be used for buying down the interest rate or, getting rid of the closing costs, right? So those concessions can be used for one and the same. Charles, why is it important to buy down the interest rate? Probably makes the home a little bit more affordable.
Mm-hmm.
Right now, if you are on any of the top websites, sellers that are really selling, they really want to get their dollar, right? But it's still an opportunity if you see a home on the market for a month or so,
Exactly.
to make an offer, not crazy disrespectful, but something in the ballpark that you can utilize. Here's an example. Let's say there's a house for 400,000 that's been listed. You're looking at it and you would like to utilize buy now. Why not make an offer, give them what they ask for, 400,000, but ask for $10,000 in seller concessions. They'll net 390. You'll be able to use that 10,000 to buy down your interest rate, and you're a little bit of a happy homeowner. You didn't completely undercut them, but you still gave your agent some
Exactly.
commission. So,
Exactly.
something of that sort is kind of how I would answer that question. But essentially, the concessions, credits, they can be used to reduce the interest rate. They could be used to reduce your closing costs,
Exactly.
and then go from there.
So I want to add to that, because I find this happens quite a bit, actually. Again, it's important, I believe, for me as an agent, it's important for us. We are not loan professionals. Some of them have dual licenses, but we're not mortgage brokers. You leave that for the professionals. But since we are working with buyers and sellers, we need to have enough knowledge, right, to be able to explain to our buyers. And then I say, okay, so let me have you speak with Charles, because he'll go more into detail exactly what that means. So there is a misunderstanding of what a down payment is and what a closing cost is, right? So I'm always finding, like, for example, you might have a buyer who's qualified, which we'll go into that a little bit into, it's called USDA, which they'll say it's 100% financing. Well, I have a couple buyers that I've worked with, and they didn't understand that 100% financing means, yes, they're going to finance 100% of the mortgage amount, but that does not include what, Charles?
That would be like attorney fees, taxes,
Right. It
closing
does not
fees,
include
escrow
closing cost. Right.
fees.
Exactly. So there's a misconception between down payment and closing costs. I'm like, yes, it all kind of it's all one number at the bottom line, but it's two different things.
Yep. So you could essentially have, let's just use one of the vets. So veterans are notorious for having 0% requirement to come into the house, right? So on a $400,000 house, essentially clients are thinking, hey, 0%. The closing costs on there collect certain fees that are kind of mandatory, right? They're
Right.
not going to be able to purchase a house anywhere without paying taxes or insurance. Usually that's collected in a 12-month rear. So let's just do simple math here. Let's say it's $200 a month for homeowners insurance. Multiply that by 12, it's $2,400. Let's say your taxes are $400 a month. You multiply that by 12, it's 4,800. Right there, those are two line items that are just closing costs. So
Exactly.
Charles, that sounds like they could go, a ton of different fees. Use 2.5% of the purchase price, 2.5 to 3%. That'll get you your number. And obviously, that can be paid by the seller, but prepare yourself about 2.5 to 3%
And that's
is
perfect. Yeah, that's
okay.
exactly what I usually tell them. I said add about 2.5 to 3%, and then it's a plus if you are using a down payment assistance program, or if you're going to get a concession or a credit from the sellers.
Sure,
So that's great.
absolutely.
Okay. Okay, so last but not least, to sort of to end our little meeting today, our Q&A, we are going to go into talking about down payment assistance. I feel that is something that, and maybe you can explain why. I know there's a lot of resources out there. So one of my my mission statement for my team, our vision, one of them is to advocate for home ownership. Because you and I both know that is it's a way of providing stability, providing generational wealth, right? And it's one of the largest investments that you'll make in your lifetime, and it's probably one of the most important. And there are programs out there, and sometimes we don't take the time, or we're not aware of them, or the lender or mortgage person that you're working with is not aware of them, or they're just not sharing them. So I want to go into one of them that is primary. It's for Florida, and I'll just let you go ahead and go into that.
Yeah, for you guys watching this, I shared my PowerPoint with her, so I'll tell her next screen because she's in control of it. But yeah, the Hometown Heroes program has been around majority of this year. The state just funneled in another $100 million into the program and got rid of the requirement, the job requirement. So they used to have a job title requirement. It's about 100 different job titles. It's completely gone. So we essentially think that that money is going to run out in about 3 months, 3 to 6 months. So just context is important. The program opened up to everybody July 3rd. Today's the 12th. We believe this program is gone by December. So um, essentially, the max you can get is $35,000. Um, you can receive up to 5% of that mortgage loan value, right? Up to $35,000. There is the ability you can put 3% on the down payment and 2% for your closing costs. So you're looking at extremely minimal amount that you're coming up with. Hometown Heroes loan is not forgivable. That means the loan is deferred and becomes payable in full when the property sells or if the property is refinanced. There is a 0% non-amortizing 30-year mortgage on there, right? So you're not gaining interest on the loan at all, right? You only have to pay that back if you refinance it or if you were to sell the property. There's no discount points and no rate buy down on this. So if you do get closing costs from the seller, you can't use it to buy down the rate. This program is probably one of the best down payment assistance programs I've seen in a
Mm-hmm.
while. It gets you into the house. I have several clients right now that I quoted around 5,000 total out of pocket that are looking at almost half of that, which is phenomenal. They're very happy, but this is why they utilize the program.
Right.
So those are essential, the basics behind it. Takes same amount of time to close, and it can be used for conventional FHA, VA type loans.
Okay. So one of the questions too is, like you said, it was limited to you know, up to 100 employments, and so now there's no requirement on that, right?
There is no requirement on that, which is, I mean, some people are upset about it, and other people are taking advantage of it. Like right now is the perfect time to give your agent a call and just say, "Hey, I'd like to know more about the Hometown Heroes program." A lot of people ask about requirements. I think if you jump on the next slide, I'll have some qualifications on there. Credit score 640. If you're doing a manufactured home, 680. About 128,000. Now this is it varies by county, but if you're looking at Tampa Bay area, you're looking at Orlando, you're looking at Lakeland, that I-4 corridor stretch, you're looking at about 128,000 total income. Funny story, not to get into too much, but a lot of the
Uh-huh.
nurses are paid in different structures on their pay slip. So
Right.
you'll have your base, you'll have a bonus, you'll have overtime. We don't necessarily have to use your entire income. So we had a principal, her and her husband made 150, but that was made up with bonuses and stuff. We just used their base. They qualified. We put them in the program. You will need. They did change this. You do need as close to 40 hours as possible. I do believe the number has moved up from 35 plus to 40.
Okay.
If you don't get 40 hours because you're a flight attendant or a nurse of some sort, it's 37.5. Your HR company will just need to sign off that you're full time.
Okay. So let me ask you a question. So what is it this the normal requirement employment time? So basically, if you've only been employed 6 months, or do you still,
The guidelines do follow Fannie,
okay.
essentially, and those guidelines essentially mean you need to have at least 2 year job history. All right, you
Okay.
can't have large gaps in employment. If you've only been at the new job 3 to 6 months, go back a year. Where were you at? If you were
Right.
not anywhere, that is going to be an issue. But you
Okay.
got to show at least 2 years job history that you've been working consistently for at least 2 years. Yeah, 2 years, and then go from there.
All right. Well,
I have the limits on there too, so you can see FHA loan limits 472
oh.
and and off. So the other one is 726 200. So follows the same
Hmm.
guidelines. Um, yeah, 726 200. These rates have changed so many times. I
Right.
opened this up back February. The last time I checked, it was about 6.875.
Okay.
Context is important. So today's July 12th, 2023. You're right around that 6.875. So some people will say, well, Charles, that's less than, an 800 credit score borrower today. Yeah, everything right now is about 7% or higher for people with 800 credit scores. So
Right.
yeah, you could come in with a 680 credit score and get a rate below 7%, 100%.
Okay.
And then back here, I just had an example: $300,000 purchase with 3.5% down, 14,475, and that's covered. It's covered 10,500 of the down payment, almost $4,000 towards closing costs. Right. So this client came to the table with $3,700, and he could have used seller concessions or gift funds to essentially come out of pocket with
Right.
zero. Another one I did was a VA buyer, disabled vet, manufactured home, 225 with 0% down. He received 11,250 down payment assistance. Seller also gave him $3,000 seller credit. It covered all of his closing costs. So he used the overage to just reduce the principal, so he had less to pay back, which is another great opportunity. So, yeah, so essentially those are the most recent examples that we've seen, and one is essentially this guy, this disabled VA vet. He got his house essentially for free. I mean, he still got to make his mortgage payments, but it was awesome for him, right? He can use that money for something else. And the FHA buyer, who at the time was a dental assistant, came out of pocket, bought a home for less than what you'd buy a car for. So that was
Exactly.
awesome.
Exactly. Well, thank you so much for sharing all of this information. I think it's really important. You and we discussed this quite a bit about changing sort of the narrative that's going out there, because some people are, doom and gloom. Just have just basically just I'll just keep renting, or I'm going to wait until the prices drop, or I'm going to wait till the interest rates, drop. And I
And
think
I'll say this as well. I had several clients over the past year, who told me they were going to wait until the market crashed.
right,
Right.
and
At
we're
the
still
time,
waiting.
the rate was 4.5%. It's a perfect theory in thought. I mean, people look on Instagram, TikTok, YouTube, all these things. It's a perfect theory. It just, you have to know where you're at. You
Right,
have to say to yourself, okay, I live in Tampa Bay by the water. A lot of people want to live here. Or I live in Orlando next to Disney World. People are coming here. You can't use that same theory in like Wichita somewhere,
right,
right?
exactly,
That works in this area. So know where you're at, know where your market is, and then make a decision that's best for you.
exactly,
Those same people a year ago, their rates were 4.5. It's 7 now,
right,
right?
exactly.
So and the market's still pretty
It's
steady.
still it's a supply and demand. And I mean, we actually, we had an uptick, we had an increase in home sales, last quarter. So the market is strong here in Florida. People are still moving here. They're still anticipating on people moving here. So like I want to end it with that. Um, you know, get the information, which is fine. There's a lot of information online, but either get someone that you refer, or something like this. Okay. So ending that with, if you want more information, on the down payment assistant, the Hometown Heroes, which is now open to all employments, or what other programs are available, or what you could be doing to prepare yourself for home ownership. Follow me on. I'm on Instagram. I do TikTok videos. I'll have this on YouTube, and you can also go to my website, which I'll have that at the bottom, the www.theflhomedreamteam.com. I've got some great blog posts on there. I can also email you a PDF guide that sort of goes through what to do to get into home ownership. And again, get referred or ask someone if they know someone like Charles, or you can call Charles, and I'll be adding his contact information on here as well. Because one of the things I will say about Charles that I do like, he's not just taking basically, a lot of times when you reach out online, say to a lender, and nothing against, when, because we all have to use, online sources to be able to promote and market our businesses and our professions. But he will give you a consultation. And that's really what you're looking for when you're dealing with any type of real estate professional, is you want someone who's going to consult with you, right? They're going to find out where you are, where you would like to be, and what you need to do to get there. So working with a group of professionals that's going to come up with a strategic plan to help you into the path of home ownership. So I want to end with that. If you want to add anything to that, Charles.
Yeah, I mean, look me up, Charles Baxter Mortgage. You'll find my contact information wherever. Miriam will drop it here. Please feel free to reach out. Um, I just honestly feel right now, if you're reaching out to anybody that is just pulling your credit and putting in a program,
Exactly.
you're at a disservice. Like, you should be able to reach out. I know when clients reach out to me, I schedule 20 to 40 minutes and we just go through everything. We're not pulling credit. We're not going through
Exactly.
anything. We're just coming up with, hey, these are your opportunities. I'm going to send you the information. Follow up with me in the next 2 to 3 days so that
Exactly.
people can read it and go through there. So if you're coming from a place of education and people are trying to give you the information, take it. Take the value. Don't take people that are just used car salesmen trying to get it
Exactly.
done. Right?
Exactly. Well, until next time, I look forward to having another conversation about the state of real estate and any other new programs that may be coming up, as well as being able to provide some information for those people who are just thinking about it. They're on the fence, or they don't know where to get started. So until next time.
Alrighty. Thank
All
you. See
right.
you guys.
Bye.